Ladies and gentlemen, welcome to the MPE Summer Week. Please join us in welcoming the chairman of the program for Day 5, Alex Rolfe.
Good morning or afternoon, ladies and gentlemen, from wherever you're joining us around the world. It's a great pleasure to be here today. Appreciate that it's Friday and Friday afternoon for some of us in Europe, which means we may be standing in the way of a number of people's first drink of the week. So thank you very much for joining us and the MPE team today. My name is Alex Rolfe. I am the Managing Director of Payments Cards Mobile. I've been involved with MPE for 10 years or so now, and they always do an amazing job of the content and the exhibitions that they run and produce and the speakers that they get, and I'm glad to say that today is no different. Our topic today is merchant payments, the new normal, and I want to open that subject up by just telling a very quick story of something that actually happened to me today. So I walked into a coffee shop in a little town called Holt up in North Norfolk to pick up some coffees for a meeting I was about to have. And as I was waiting, having paid using my phone and Apple Pay, I noticed a little chalk board with a sign written on it. And the sign said this: "Only card payments accepted. We no longer accept any cash payments. We're sorry for the inconvenience." So I had to stop and think about that just for a little while because it took a moment to process it. And then I just took a picture of it. And I thought it was only 4 or 5 years ago that I walked into a shop like this in this small town in the middle of North Norfolk, and that sign would have said something entirely different. And I think that you all know what it would have said. So the new normal is potentially here, and we've got 4 great speakers to discuss that journey, or whether we've actually arrived at that destination. And with that in mind, I'd like to introduce our first speaker, who is Jared Dreeling. He's Senior Director of Consulting and Marketing Intelligence. Jared, welcome.
Thank you, Alex. Good morning, good afternoon, good evening. My name is Jared Dreeling. I'm the Senior Director of Consulting and Market Intelligence at the Strawhecker Group. And today I'll be discussing the future of payments. So as a little, next slide is a little for my background. I've been in the merchant acceptance space or the acquiring industry for the past 16 years. I initially started my career off at First Data, now Pfizer, in a variety of roles, including market competitive intelligence, corporate strategy, product management. Today, I'm with the Strawhecker Group, or otherwise known as TSG. TSG is a data analytics consulting and market intelligence shop focused on the international merchant acceptance space. We work with a variety of payment players, from Fortune 500 companies to fintech startups, and we assist most of those entities with a wide range of strategic initiatives. Next slide. So merchant acquiring, we are in an industry that is under transformation. The ongoing and rapid transformation of payments and the merchant acquiring ecosystem raises tough challenges. Now, I think back 10 years ago, the payments ecosystem was mature, with participants and consumer expectations and the rules well established and understood. And I think it's safe to say this is not the case anymore. So let's get started and understand why that is. Next. Today, it seems like every component of the payments world is undergoing dramatic transformation. Tech-savvy consumers are setting new expectations for ease, convenience, and value. Smartphones and tablets are clearly at the heart of this revolution, with new technologies such as cloud, data analytics, and social media also driving change. These same technologies are enabling new ways of paying and enabling new entrants to bring unique payment propositions to the market in a more frictionless or integrated manner. The payments players and their merchant partners must continue to adapt or potentially risk losing relevancy. Next slide. I think most importantly here, consumers now have more physical and digital options for shopping and commerce. And a wave of new entrants have increased the consumer's appetite and willingness to try new and emerging payment types. In addition to that, consumers are no longer limited by physical or geographic boundaries when it comes to purchasing goods and services. And all of this is putting pressure on merchants to upgrade their payment equipment and their business software. And as a result, merchants expect their payment partners to provide a wider range of solutions. They're looking for a partner that provides a complete business management solution from in-store to all online, all from that single point of entry or hub. Next. So why is all of this changing? Well, on one hand, technology is innovating and expanding at an exponential rate. Not only is the scale of change massive, but each wave of disruption, from the internet to smartphones to social media, is achieving mass adoption quicker than the one before it. I mean, think about it. The telephone was invented in 1876, but it wasn't until, about a century later that landlines reached a saturation or penetration point in households. Microwaves, cell phones, smartphones, social media, tablets, and other inventions from the modern era are all showing fast rising adoption rates. And standing out the most is the tablet, which went from nearly 0% to 50% adoption in 5 years. Then there is technology convergence. And this is, convergence actually leads to business innovation. And convergence is the integration of a number of technologies or functions into a single integrated system. The technology convergence opportunity for organizations is the ability to embed technology in devices and products. The smartphone is a great example of technology convergence. It's not just a phone anymore, right? It's alarm, music, financial management, phone, media, camera. All of these technologies converge into a single platform. And then finally, we get to technological singularity. And this is the thought that invention of artificial superintelligence will abruptly trigger runaway technology growth, resulting in unfathomable changes to human civilization. And in this type of world, devices and machines will communicate with each other without human intervention and accomplish tasks that would otherwise be extremely complicated, cumbersome, and time-consuming, such as payment transactions. We've seen a little bit of that with M2M, or machine-to-machine payments. So with all of that said, the change is due to technology. Technology impacts the shapes of our lives. It influences the people we stay in contact with, the type of information we consume, the way we consume it, and what we do with it. We are truly in the midst of an explosion of technology. And the degree of innovation that is occurring even at this moment as you sit here is truly staggering. Next. And it may just be one of the worst tech buzzwords of all time, but the IoT or the Internet of Things is also a key variable and is currently on the brink of changing all sectors and industries globally. The IoT traditionally refers to the use of intelligently connected devices and systems to leverage data gathered by embedded sensors and other physical objects. The IoT is expected to spread rapidly over the coming years, and this convergence will unleash a new dimension of services that will improve the quality of life for consumers and productivity for enterprises, unlocking an opportunity that most refer to as a connected life. So essentially, the IoT can bring or bridge the physical and digital worlds together. And pervasive connectivity between people and processes will enable multiple services to be delivered automatically and contextually whenever and wherever required, ushering in the connected life and connected commerce. Next. So several disruptive forces, as discussed, are fostering new age consumerism that is fragmented and personal. And the impact on retail is far-reaching as the lines between commerce and engagement continue to blur, forcing retailers out of their comfort zone. So from desktop to mobile, social media to call centers, stores to search, messaging platforms to catalogs, marketplaces to shared economy applications, consumers do have a wider selection of retail channels and business models than ever before. And this proliferation of consumer choice, again, spurred by technology, is reshaping retail and consumer behavior. So the traditional metaphor for a consumer's path to purchase, the traditional five-step process, was applicable at a time when retailers and merchants controlled the primary means of communication and commerce. However, customer engagement in commerce has increasingly occurred on platforms not directly controlled by the retailer. Think third-party mobile apps, social media and messaging platforms, amongst many others. This has essentially transferred the control of the user experience from the retailer to the consumer, more of an ongoing stream of engagement than a path to purchase. And most retailers and merchants, and even payment players, are ill-equipped to thrive in this new digital world. Next. Today, merchants have multiple channels, but don't have one central hub, one version of the truth. There are many versions of the truth. An omni-channel solution refers not only to the merchant's ability to meet the needs of these various channels for consumers, but in doing so, integrates the various channels, which can provide a seamless customer experience. In a true unified commerce world going forward, it will all be connected in real time. And unified commerce is truly the holy grail. Unified commerce is traditionally defined as a business design that leverages a harmonious integration of retail processes and systems to provide full transparency of consumers on the back end and seamless customer experiences on the front end, regardless of the journey to make a purchase. So with that said, retailers are shifting their focus to provide a holistic customer experience. Single channel solutions will no doubt be replaced with solutions that follow the transaction across channels. The central pillar of unified commerce is blending of transitions between interactions and channels, enabling a consistently seamless customer experience. Successful seamless experiences see customers moving from one touch point to another touch point with consistency and continued personalization. However, saddled with legacy systems that are not designed to accommodate today's retail environment, retailers, again, with their payment partners, have cobbled systems and processes together to try to deliver on these capabilities. So in the near future, all technologies will contribute to the successful execution of a customer journey and must be truly connected and allow customers to start, stop, continue, and complete their shopping trip anywhere within or outside the retailer's landscape. And merchants, retailers are looking to their payment service providers to offer this level of support and guidance. Next. I mean, other parts of our lives are already instantly connected. Payments are next, right? The possibilities of the Internet of Payments or connected commerce burrow more deeply into the daily lives of consumers than conventional payments. A simple example could be a reusable grocery bag that authorized payments at a grocery store when consumers check out. In the auto industry, by leveraging secure vehicle connectivity and technologies such as geolocation, voice-activated controls, a connected car can act as a payment form factor. Think a giant smartphone with apps in the dashboard. Payment functionality can also provide drivers with seamless transactions to pay for a variety of goods and services, including parking, gas, tolls, and food at drive-through restaurants. Smart homes. Connected smart home devices range from thermostats to appliances. They can be provisioned with or linked payment credentials that can be used to pay for products and services. Even the industrial landscape is introducing smart pay-per-use models and billing models, which are opening the door for industrial equipment to include payment capability. So consumers are becoming more aware of their digital footprint. They want more control over it. An expansion of the IoT greatly increases that footprint, especially as the industry moves from the world of single device and single experience to an ecosystem of multiple connected touchpoints. Next. So one main ingredient to this transformation has been the shift in focus from hardware to software, or ISVs. Next slide. It's always been clear that a layer of technology powers the business operations of merchants, and this trend will only continue to grow in the future as merchants have less hardware decisions to make, and software continues to play a more critical role in the success of merchants and unified commerce development. Thus, the model going forward is a technology-enabled, software-led distribution strategy that allows integrated payments with more flexibility and less friction. The essential gravity in the ecosystem right now are those software as a service providers, the central point around which all other services rotate. This trend will only continue at an exponential rate. So over the next 5 years, the vast majority of merchant payment revenue growth will be acquired through software solutions. At the same time, cloud computing is lowering the barriers to entry for software firms seeking to provide merchant payment services. It is easier today to develop inexpensive payment solutions and to connect various systems and platforms than it was just 5 years ago. Next. So payment players are investing heavily in making their platforms easier to integrate with software solutions. Today, specifically cloud computing, is making the integration of payments functionality into other software solutions and channels less burdensome. As a result, a host of different business software solutions can provide payments functionality on lower cost hardware, such as tablets. And in our payments world, this trend is clearly evident in the POS space. Coupled with hardware advances such as smartphones and tablets, POS systems are transitioning from payment-only terminals to software solutions that can help merchants operate their business and provide a variety of integrated channels back to consumers. In many cases, these smart terminals have acted as an innovation platform where vendors and participants share information or business processes with each other to improve the technology or to tighten the integration through a common platform. Next slide. So the world of payments, software, and technology is intersecting at a rapid rate. Software is quickly becoming the driving force behind commerce. It's going to determine who merchants work with, how they run their business, and where they find their service providers. In a world with true unified commerce and integrated payments, payments will become completely ubiquitous, autonomous, invisible, frictionless, and highly personalized. In other words, payments will be everywhere, and everyone and every device can be an acceptance tool. There's a reason that integrated payments is one of the most important topics. The next generation may never know of a time when payments are made with a piece of paper or plastic or even a phone. So where are we at in this migration today? Well, paying for goods and services is becoming ever more seamless, frictionless, and behind the scenes. You enter your Uber car, you arrive at your destination, the payment is handled in the cloud, that's it. You get a receipt via email, and you've not even thought about cash or cards even once. And also, although most people don't think about Amazon Alexa or Google Home or Apple Siri as artificial intelligence, the reality is that the domestication of AI and connected commerce has come in the form of voice-operated commerce. In other rare examples with location-based technology like beacons, physical stores like Amazon Go automate much of the purchase, checkout, and payment steps. Clearly, in this example, there is no need for physical monetary exchange. Rather, our smartphone or other devices are being leveraged for check-in payments, which fade the payment process into the background so that it does become invisible. So as quality, simplicity, security, speed, and consistency separate leaders from laggards, innovative products and services can open up a world of possibilities for traditional payment service providers and others within the ecosystem across the payment processing space. The proliferation of mobile devices and consumers' increasing need quickly and safely and have fast, easy, and safe access to places and information paves the way for payment providers to sharpen their competitive edge with payment options that suit the connected life. So tomorrow, invisible payments, the friction and necessity for human intervention and or interaction will be removed from everyday activities involving any financial transaction. Next. So device connection, tech convergence, and artificial intelligence changing consumer behavior, it's opening up many new opportunities. And as these variables drive additional opportunities and evolve in a more payment setting, we can expect that payments in the future will be more integrated, will become more invisible and behind the scenes, will become more personalized, and become more data-driven. Most importantly, payments will be more ingrained into our daily lives. Thank you for your time today. Back to Alex.
Hey, Jared, thanks very much for that. There's quite a lot of thought-provoking information in that presentation, and I think we'll come back to a number of the points that you made there. So thank you very much for that. Just on that note, I should have mentioned it at the beginning. We've got a couple of the keynote speakers, and then there's a panel session at the end. It is a live panel session, so if you're in the audience and you're watching, you can use the dashboard to pose your questions, and any questions you've got for one of the four speakers, we can then get them to answer those, and we can have a discussion around those questions. So if you see anything that doesn't make sense, or if you see a particular item that you think we ought to explore more, please feel free to pop those questions onto your dashboard, and we'll get to them after we've finished the keynotes. To that note, I would like to welcome Nick Telford-Reid. Nick's on the advisory board member and executive partner at Endava. So welcome, Nick.
Thank you, Alex. It's a real pleasure to be here today. And Jared, I really enjoyed our presentation. And you began to dive into some things that I'm hoping to kind of cover off right now. So let me introduce myself. I'm Nick Telford-Reid. I'm a consultant in payments and identity, and as Alex says, an advisor to Endava. And they are a technology company which helps its customers build and run platforms and experience that fuel the rapid ongoing transformation of their businesses. And they've got a very strong portfolio of clients throughout the payments industry. Now, I actually wear lots of hats, and among others, I'm the co-chair of the Web Payments Working Group at the World Wide Web Consortium, which exists to create standards and interoperability for the open web. So you may also hear me refer to that as we go through the presentation today. So I thought today, everyone's had a week of hearing about COVID-19 and the move to digital. But over the next 13 minutes, what I'd like to do is talk to you about the next new normal. Where are we heading after this? So I'm going to start by talking about how payments are fading into the background. Then we're going to go right forward. So building on what Jared's just been talking about kind of AI, and we're going to talk about what that might mean when there's no human involvement in the payment at all, because we've truly delivered invisible, frictionless payments. And then I'm going to try and walk us back to today. So I'm going to stop off to talk about identity and authentication, and talk a little bit about the fragmentation of the payments landscape. And I'm going to finish up by signposting a particular set of technologies that exist today and that I think merchants and providers should be looking at right now to provide for the next new normal. So I need to start by talking about invisible payments, and in particular the tensions that surround them. If you're a merchant, you just want payments to disappear into the background. You're working hard to build the best retail experiences you can. They're smooth, they're frictionless, you've got great product, you've built these fantastic experiences, and there are no bumps in the road. And what you don't want is that awkward actual asking for money. And, Jared already gave the example of Uber, but this idea that the payment just auto-magically happens. And my guess is that everybody listening to this webinar today is probably wealthy enough not to worry about the cost of a ride, or your washing machine ordering some new detergent without really being asked. But here's the tension, right? What if you're not a wealthy middle-class payment professional? What if you're a working single parent who's faced with the economic reality of heating the house or feeding the kids? What if you have some kind of disability that means that the decision to buy and the decision to pay needs to be better signposted? All week we've heard about people shopping online that have never done so before. We talk about digital natives all the time, but I think we also need to be thinking about the digital naives, those people who don't understand, can't take for granted the things that people who've grown up in that milieu just accept. So let's look out to the future and see where this might head. So I want you to ask yourself the question, is this going to be the next new high street? Do we end up in a situation where machines pay machines and there's not a human in sight. What might that mean? You know, as an industry, we've automated and we've streamlined. Can we orchestrate the entire experience irrespective of channel? Notwithstanding Chris Skinner's objections on Monday to there not being any channels anymore. My guess is that most marketeers and merchants still think that way. Well, let's think about some examples. So, could payment ecosystems emerge where all it is machines, and the machines are not representing, they're not proxies for humans? So the example I always like to give is this one here. So it's an assembly line, and you know, we're at the station, we're at the machine that puts the left front door on a car. So maybe that machine actually has to buy the chassis that is from the next station down on the assembly line, and it has to pay for the door that it's putting on, and it has to pay for power, and it has to pay for fixings, and it has to pay for lubricants, and then it itself gets paid for the next, by the next station down on the assembly line. That brings us some really thorny questions. When machines are genuinely autonomous, where does accountability sit? If that front door falls off as you're driving down the Autobahn, what do we do about that? Who's going to take responsibility for that? And we do have this concept already, you know, there's this idea of juridical or legal persons. So corporations, companies can already take some of the responsibilities and the rights of humans. Companies can own property, for example, and they can be accountable for things. And to their great credit, the EC is already starting to look at whether this can also be applied to autonomous machines. Now, you might take a step back and you argue, well, why look at this? Why would you have these kind of closed ecosystems? Isn't it just, don't you just kind of bill on the inputs and outputs of the factory? But that actually misses the point. These are not closed ecosystems. It's an open ecosystem. The components are coming from anywhere. They're coming from the component supplier, they're coming from the power company, and so on. But I agree, this isn't a consumer-focused example. It's deliberately depersonalized. There are no humans inside. So let's make this more personal. What if these are the machines that are orchestrating payments? You know, the idea of payments in healthcare is altogether closer to home. Who makes the decisions now? What if your credit line on your oxygen supply runs out? Now, you might say, come on, Nick, it's Friday. You're being deliberately dystopian. Where is this really heading? Well, I think we need to think in the medium term. We need to think about a nearer future. We already have machines involved in decision-making in payments. Issuers, schemes, banks, acquirers, merchants all have sophisticated machinery and software deployed to decide whether a payment should occur or not. And there's going to be an arms race to build the best models of risk. You know, all through this week we've heard of PSD2. We've heard about trusted beneficiaries. We've heard about transaction risk analysis-based exemptions. We're moving from a world of discrete yes and no in payments to something altogether more probabilistic. And the people who can build the best model of risk will be the winners. But I also think we will see the rise of something similar on the user side. Agents that can actually represent us, something that knows us and our parameters of risk and liquidity and capacity for understanding and to consent and all the other complex variables that make up messy human beings. And of course, this means we have to talk about the biggest questions in payment. Who is paying and who is getting paid? If you can answer those questions, everything else is just wiring. But astonishingly, given the level of technology now involved in payments, we're still not very good at answering these questions. And we're even worse at it when we start worrying about balancing privacy needs too. But Nick, stop. What about Touch ID? What about Face ID? What about the Android equivalents? I can hear you yelling at your laptop screens. Well, let me ask you this rhetorically. Who is listening to today's webinar who's got a device at home which is shared? A tablet that your kids watch Netflix on, a computer that's common to the household. I know my kids know how to unlock my phone, and my wife and I know how to unlock each other's phones. I can unlock my parents' phones because I'm their IT support. But the reality is, in payments today, most biometrics used don't actually prove that you're the payment user. They prove that you're known and trusted by that device. Binding beautiful, pristine digital credentials that Dave, who's going to be on the panel in a moment, loves talking about, binding those to the messy human meat bag that's the user, that's always been the most difficult bit. I apologize for using the term meat bag. But perhaps the answer is to live in digital communities where our identities and our behaviors are really well known. Again, we've heard this week about social network-based payments, which might seem to offer that. You know, if you stay in Facebook to do your shopping, we heard about Instagram and Facebook stores, and we've seen the rise of Libra too. If you stay in those environments, then they can use everything they know about you to make everything very safe and secure. And you could say the same about WeChat Pay and Alipay, living in these lifestyle applications, living in these ecosystems with closed walls. And maybe as we see the emergence of truly digital fiat national currencies like in China, maybe this is the answer. Closed walled gardens where all the risks and actors are well known. But historically, the payments industry has been a mixture of open and closed ecosystems. And we're working, with people working hard to provide interoperability. And then you get these gateways between these different systems of value. And latterly, we've even seen the emergence of technologies like Interledger, which offer pathfinding between those different ledgers of value. With each gateway, a business opportunity and a control point. But perhaps the answer is actually to look for opportunities for true open information sharing. I joined a really tremendous webinar earlier in the week talking about chargebacks. And it's difficult to see, the information sharing there is crucial, but it's difficult to see one single global digital currency emerging despite what Jack from Twitter might think about Bitcoin. It would require major, fundamental changes to the world's economic and political systems. But there is one ecosystem which is common to the vast majority of people, cultures, countries, technologies, handsets, social networks, and languages, and it's called the World Wide Web. Astonishingly, it's still only 30 years old. As the digital and physical payments worlds converge, driven on by COVID-19, or just by, further and further digital acceptance, we see payments, the line between physical and digital payments really beginning to disappear. I love this example of QR being used now to make what had historically been either digital payments in a physical environment or digitizing physical payments. Things like Ideal now being used at the point of sale in the Netherlands. So look, having looked into this future landscape of machines and of diminishing influence of humans on payments, it's worth reminding ourselves that today we are capable of building and sharing things that are common and open. And that brings me back to the present. What can we do today to prepare for the future? Well, I wanted to bring one nugget, one piece of technology to everyone's attention. Because, believe it or not, there is actually, for the first time, a set of technologies that lets users authenticate themselves on the open web. It's common across the web. It's implemented by all the major browsers, and it's now being supported by all the major operating systems too. It's called Web Authentication, or WebAuthn. It's a W3C standard. It's grown out of the FIDO Alliance's specification suite, which itself grew out of kind of password replacement and hardware keys. But it now offers access to platform authenticators like Windows Hello or Touch ID in a web context. There are actually a number of really interesting and exciting joint efforts between EMVCo and the FIDO Alliance and W3C to begin to look at joining these things together in the payment space. And I would really urge anybody listening today to just take a couple of minutes to investigate how far that has come, because whether it's 3D Secure or it's SRC, we're beginning to really be able to create native-like experiences on an open ecosystem. So look, the new normal is already here. We've spent the whole week talking about it. Physical and digital convergence is already here. Payments are going to get pushed further and further into the background, but there will always be a need to surface consent in some circumstances. And technology can help users manage that, to surface the consent, to have agents that represent us, to speak for our needs and then bring us in when we need to. But authenticating users remains the greatest challenge, and for the first time, we actually have some technology available in our browsers, on our mobiles, on the web, where we can have a really good stab at proving we are who we say we are, so that the payment experience can be as good as it's ever been. And with that, I wish you a really great weekend, and let's go back and have a panel discussion about my dystopian vision of the future.
Yeah, thanks, Nick. Yeah, some very thought-provoking stuff in there, and I look forward to getting stuck into that. So, as I mentioned before, this is a live Q&A. I'm going to do a couple of introductions in a second, but it is your opportunity to ask the panelists about some of the items or elements that they've brought up to date. So thanks, Jared. Thanks, Nick. I'd like to introduce Dr. Christine Bailey, who's the Managing Director, SMB UK and Ireland for Valitor, and Dave Birch, who's a Global Ambassador at Consult Hyperion, amongst other things. Christine, would you like to just kick off by telling everyone a little bit about yourself, and then we'll move on to Dave?
Sorry, I muted myself. Hi, I'm Christine Bailey. I've been in the technology world all my career in marketing, actually, and my passion is customer insights. I've got a book coming out in November about customer insight strategies. So, and I've been in the payments world. I joined Valitor 3 years ago as the Chief Marketing Officer, and in March this year, I also took over the UK business, serving small businesses. So Valitor is a international payment solutions company headquartered in Iceland, been in Iceland since 1983, and we specialize in serving both through partners and direct small businesses.
Thanks, Christine. Dave, do you want to say hello?
Sure. Hi, I'm Dave Birch. I'm Global Ambassador for Consult Hyperion, which is a specialist consultancy in the electronic transactions field. And I've written some books and blogs and Twitter and stuff like that. So.
Thanks, Dave. Okay, so shall we put the gloves on and go straight for it? I think we'll hopefully get some questions coming through, but some of the stuff that resonated with me from the conversation, and the one that I hope will get everyone going is this machines paying for machines, without human involvement. What do we think about that? Do we think it's realistic at this stage? Christine, from your perspective, do you think it's relevant at this stage, or is that a little bit too far out in the future?
Well, I used to work at Cisco for many years before I joined Valitor. So the Internet of Things, machines connecting with machines is totally familiar to me, and a concept that's been around for a long time now. Is it quite there yet in terms of the payments? No. But it's not as far off as it might have been. So I think the acceleration towards the digital world, which has just gone into overdrive because of COVID, has meant that more and more people are seeing the online channel in a way that they never saw the online channel before. So even small businesses now, 55% increase in online payments since COVID. So what might have seemed like a long way off, machines paying machines, I think it's just got a whole lot closer.
Sure. And again, from your perspective, thinking about if I'm a merchant, is it something I need to start being concerned about, or is it just a kind of big industry thing? a kind of industrial thing that won't really affect any, any merchants out there? What are your thoughts on that?
I think to put it in terms that sort of people can relate to is the mobile phone. I mean, that's a device. Yes, all right, there's still a human operating it, but already we've got far more familiar with making payments on a device and an Apple Watch than we ever had before. So that's the next step. So people don't need to think about, vending machines directly, going back to the manufacturer, or it a bit sort of, more futuristic. I think what feels real to people today is that they can pay with a device, mobile phone or a watch or something. And that's all they need to think about. I think that the logical step now is more online. So without people realizing it, we're already going in that direction without people necessarily having to think about what comes behind. And when we heard in the payments at the previous presentations is the payments need to be invisible. So actually the consumer shouldn't and need to think about it. It's what we need to do in the background to make everything seamless, frictionless, invisible, all of those terms that we throw around.
Sure.
I think one of the points that I was trying to make, Alex and Chris, is, merchants absolutely want payments to be completely automated and orchestrated. But actually, I think as an industry, we need to think really hard about what that means. And because I think taking away consent in all circumstances is going to bring us head to head with regulators and bring us problems. So I agree that, in most circumstances, if you really know your customers, that should be the aim. But I think we need to be careful of what we wish for.
Well, I think the point that was made in the first presentation about the transition to invisible payments, I agree with very strongly. But Jared also said about the transition to omnichannel, which goes to Christine's point, because we all know that the phone is going to be the omnichannel device. And in fact, there was a workshop earlier in the week about the third scheme, the EPI, and about whether it would ever use cards at all, or whether it would be better off just on the phone. So if you kind of put those things together and you make those the backdrop to Nick's nightmare vision of a dystopian future, I think you do actually see, something workable. But it rests on a couple of things that we don't have yet. And, one of Nick knows what I'm going to say, because one of them's identity. This Internet of Things payments thing, I'm 100% behind that, but we can't fix it until we fix the identity of things, and that we don't have at the moment. It's all very well for my car to pay for the parking spot, but how do you know that I gave my car permission? How do you know it's my car? How do you know I'm allowed to park in that parking spot? These are identity questions, not payments questions, and we haven't fixed those. But the other one I'm starting to come around to actually is RTP. So this issue about consent, if we forget about card things and debits and that sort of stuff, and we just imagine a kind of RTP version of that world where you can sort of see that working, right? I don't know what Christine, but you can sort of see that working. So the parking space uses RTP to send the payment request to me, with all the right digital signatures and stuff under the hood. And then I okay it on my phone, and I'll do that a couple of times, and I'll get bored with it. So then I'll go to the phone and I'll tell the phone, if it's a parking space in somewhere I normally park and it's less than £10, just go ahead and pay it. I'll manage the consent at my end. We'll do away with the old-fashioned infrastructure of mandates and all this sort of stuff. So it sounds like those things are far away, but I think the vision that the guys are putting forward is actually pretty realistic if we can just fill in a couple of those little gaps.
Yeah, I agree. I mean, I think if you combine that with, geolocation tracking, to take the car example, all the things add up to the identity. So my mobile phone that belongs to me, that in the car that belongs to me, is in the car park at the time that the car is making the request to park and pay for that. So therefore, it is more likely to be me because I am in the car park, in the car at that moment in time.
Yeah,
I think it's just,
right.
Very sophisticated connection of data.
Yeah, and distribution of liabilities, which we don't want to bring the whole thing down by talking about that. But yeah, so I don't think it's as far away as the guys were making it sound in their presentations at the beginning. I think it's closer than that.
Okay, so ID is definitely a topic I'd like to raise, but whilst we're talking about the machine to machine, there is a query come in, which is how do you see open banking playing a part in the machine to machine payment scenario? You know, does one thing require the other, or does the open banking aid the movement towards machine to machine? Jared, perhaps you have some views on open banking.
Well, I think it, obviously does. But, one of the biggest hurdles when we're talking about any of these integrated environments or connected commerce-like environments is, payments at the end of the day is complex. And you almost need a grand collaborative approach where, they're bridging all of these various parties together. Years and years ago, before, Apple Pay and Android Pay got into the mobile payments game, payment providers, whether they be processors and networks or banks, the telecom providers, the service providers, all tried to create an alliance and come together. And there wasn't a lot of collaboration. And if anything, it was more of a hurdle to bring these parties together and try to work on the same page. There was always a big battle or land grab for who owns the customer at the end of the day. And we're seeing this in connected car environment as well, where we're processors bring tokenization types of products and services to the automobile manufacturers. They're bringing software vendors, QSRs, all into that type of conversation. But at the end of the day, who owns a customer? Who's going to drive that collaboration across the ecosystem? And I think that's one of the biggest challenges that we'll face in any of these types of environments.
Mm-hmm, mm-hmm. So just sticking with open banking. I've lost my train of thought now. Sticking with open banking. Oh yeah, just thinking about the merchant.
You were on the right track before, Alex. So the answer is yes, and it's because you touched on it. You see, because the thing is, on the one hand, we can see that open banking takes us into RTP, push payments, low overhead, all that sort of stuff. We consider that. But the thing is, open banking also, and you see this actually with the HMRC tender around this as well. It also takes us into a different kind of automation, because it isn't just the payment, it's the stuff around the payment as well. And, you see the kind of things people are, you were at one of those things with me when people were pitching those open banking things. So the way people are moving with this kind of thing, it isn't just the payment, it's the stuff around the payment. It's, looking at your bank account and seeing actually this guy, he can afford this, but he's spending too much money on credit cards, so it'd be better to get him this kind of loan, that sort of financial health stuff. It's looking at this and saying, okay, I can see this guy has parked in this same place for the last 6 months, or the open banking thing energizes this space, but not just because you can make the payment. And also, and I think, I don't know what you guys think about it, but it seems to be from some of the startups I've seen that you actually don't need that much of the transactional data in order to be able to make some pretty interesting new services for the, we've already seen that in the SME space actually with the financing. You don't need to see that much transactional data to say, this person, could use this or could be helped with that, or actually they're not in the country. Who is it trying to park their car? So it's not just the payment.
So just I recalled what I was thinking about, but I'm assuming that or I hope we have lots of merchants on this, in the audience, and from the perspective of them, what do they need to be looking out for? And are there set things that they should be looking out for that they need to be doing around open banking and this kind of automation, or is it just kind of stay with what you're doing, let it come down the line and react to it?
I might be remembering this wrong. Maybe because I can picture Christine on a stage, but I can't remember where it was. I'm so hazy about the old days where we used to go places and talk to people.
You're generally hazy about everything, Dave.
Yeah.
But I am getting very hazy about everything. That's true. But I'm wondering if it was MPE. I can certainly remember there being a discussion last year about why it was that some of the larger merchants hadn't already got the open banking licenses and weren't already in the AISP, PISP businesses. And there was a discussion about, does that happen because the merchants come together and create a sort of Euro version of MCX, but one that will actually work because the banks can't stop them from getting access to the accounts, or do the big retailers set up their own PISP operations and move forward? And I don't know enough about the space. It's not so. I'm slightly puzzled that more merchants haven't started doing that.
I think actually, Dave, one of the things that's really interesting to me is that although a lot of the momentum for open banking is here in Europe, actually I kind of feel like the US might be a more fertile ground for it, simply because the economics are more advantageous there. You know, interchange fee regulation in Europe has kind of pulled a lot of the margin out of card payments. And although I know many retailers would say that their payments are still too expensive, they're very much cheaper in the European market than they are in the US, for example.
That's a fair point.
You know, I hear from merchants an enormous amount about how unhappy they are about what they pay. And I know convenience stores and fuel retailers in the US. Somebody told me the other day that actually, you know, after the cost of fuel, the cost of payments is the next biggest cost, you know, before staff. And that just doesn't make any sense. So I could see kind of verticals in the US where there are kind of strong trade associations coming together and really beginning to look at whether they can drive the economics of payments down, and that might be how you pay for that kind of innovation.
Well, the equivalent in the US then would be for, you know, if the merchants got together and used API access to drive
exactly
stuff, like, you know, to compete with
QR
Visa and
on the
MasterCard.
forecourt.
Oh wait, Visa and MasterCard just bought all the APIs. So
Yeah, well.
So, Jared,
turns out they're smarter than us after all.
Yeah.
Well, they listen to their good strategy consultants.
Sorry, Jared.
So, you know, we at the Striker Group, we talk to a lot of merchants in the U.S. market, and you know, I think when we're discussing omni-channel like payment tools and you know what types of tools merchants are, you know, seeking today from their payment providers to bridge that gap. I mean, quite honestly, there is a gap between what merchants want and what they need, and I think most, you know, merchants are leaning on their payment provider or software partners primarily to provide guidance on what types of tools should be adopted. And in many cases, again, you know, quite honestly, their payments partner may not know or even have a lack of understanding of what is truly needed. We all understand that consumers have all of these channels available to them today. Many providers that we're seeing are simply selling, you know, merchant single channel tools, which would make it even more fragmented for those merchants. You know, merchants, on the other hand, are also band-aiding these solutions together from multiple parties to bridge that gap, but it's creating more friction. I think, you know, clearly there's been a growing interest from merchants to support alternative payments. We've seen continued interest on that front. I think in the, you know, small merchant market, the smart terminal adoption is clearly a growing trend here in the U.S. And I think when we look internationally, it continues to expand as well, where, you know, I think of the Squares, the Clovers of the world, Lightspeed. You know, smart terminals have also proved themselves in the current environment. So they're providing merchants tools that allow them to quickly pivot or adjust to new channels in a integrated fashion. And although not a true omni-channel platform, I think it's a great omni-channel-like tool for SMBs.
I think the other thing that's really interesting about smart POS, smart terminals, is that they take away some of the constraints about innovating with new payment methods at the point of sale as well. So, you know, if you've got a terminal or a POS that is also a tablet, then it's got a camera and it's got a screen and it's got Bluetooth, and so you can do QR and you can innovate around those things. So that kind of control point that the traditional payment rails might have had at the point of sale.
I don't know about that, you guys. I mean, I'm reluctant to. I know Christine almost certainly spends more time with these sort of merchants than I do, because I just go and occasionally buy things from them. But trying to persuade the guy around the corner that, you know, a super duper whizzy tablet POS is more cost effective than a barcode that he can print out and stick on his window. I don't know. I think things, maybe the pandemic is pushing us downhill a bit faster.
I think that criticism's fair, Dave, but I think actually the more to the point is that in my opinion, the smart terminals that will win, they'll just run on the retailer's own devices. They won't be dedicated devices. They'll run on the iPad, and then they've already got those. Then they don't have to buy anything.
Yeah, I mean, one of the great changes, through COVID is with loyalty cards. I mean, I don't know if you like, I hate. Well, I don't use loyalty cards because I can't bear having like 20 of them in my purse at one time. And now you can do payment loyalty on the terminal, linked to the card, as long as you're using the same card, which means that you don't have to get out the grubby card and hand it to somebody, or you can just the terminal itself will tell that that's you, and you can do payment loyalty on the terminal. So I think people will get used to smarter terminals. And funnily enough, we've just done some research amongst small businesses in the UK about what are their main concerns about payments and post-COVID. And of course, the standout trend is the move towards online payments. But the biggest concern was about compliance with data security. So when they think about payments, they're thinking about that's the number one thing they were worried about, 44%, and then 39% were worried about online fraud. And then the next ones after that then started thinking about, well actually, I've no idea how do I turn my website into taking online payments? People don't really understand what's the difference between just a regular sort of shop front and then, or do I just need to add in the payments piece? Well, no, you need the shopping cart and a basket, and you can't just add payments to a website that's not an e-commerce website. So those are the kind of practical things that people are thinking about today.
I think it's really interesting that they're worried about...
GDPR is a bigger pain in the arse than hackers, basically. That's what that tells me.
Yeah.
So basically, the average business is more worried about lawyers than they are about North Korean cyber terrorists.
I think that's more. I think that speaks more to the fact that acquirers in the UK and elsewhere have done such a good job of monetizing their compliance programs that it's front of mind, because it's the first item the merchant sees on their bill. It's their compliance, their PCI compliance cost. Anyway.
So just we've talked quite a lot about sort of payment specific enablement technology, open banking and payments initiatives. What about external enabling technology? And I would jump straight to 5G here. Is that something that you think from the merchant perspective, is 5G going to be helping enabling stuff that they do faster or better?
I think, that varies by kind of geography, really, I think, Alex. So, for example, in Norfolk, 5G is widely held to cause coronavirus. So I think it'll take a lot longer to get a foothold. A lot longer to get a foothold where you are.
No one's got 4G, let alone 3G yet. So yeah, we're at a disadvantage.
Look, I think the enabling technologies are. I go back to the point made in the first presentation. Let's not beat about the bush. It's phones, okay?
Yeah.
So the most important enabling stuff, and if you believe Nick's theory about identity and all this sort of stuff, and if you believe Christine's points about getting rid of loyalty cards and all this sort of stuff, then basically the important stuff that's going on is Apple filing a shed load of patents around identity and credential management. It's what appears to me to be a healthy convergence on W3C verifiable credentials. It's the standardization that Nick pointed out around Auth-N and FIDO and stuff like that. Those are actually the enabling things that are the platform for the next generation. I think those are all more important than 5G. It's like that train line up to Manchester that they're spending 100 billion trillion pounds on. I mean, you can already get there by train. It's just a little bit faster. 5G
horrified though I am to do
thing.
so, I find myself agreeing with Dave. I don't know that 5G is particularly a game changer for payments. There's pretty strong connectivity now in most retail environments, either by fixed lines or by mobile.
Yeah.
I think the only thing I would take issue with my learned co-panelees with is I think we have to be a bit careful about enforcing payment we have to watch out for forcing consumers to have to buy $1,000 fondle slab phones to be able to make a payment. That's absolutely fine for the digital natives. It doesn't work for my mum, the digitally naive.
Yeah, but I mean, statistically speaking, now since 107% of people in the UK have got a mobile phone, so that means some people like me have got two, one for work, one for pleasure, and 86% of people, and this is recent data now, and of course accelerated through COVID, but 86% of people have bought something online, and they're most likely, they bought something virtually online, and they're most likely to have done that through the mobile phone. So I think anything, talk of 5G, anything that makes it easier to use the mobile phone. Yes, of course, there are still some people that don't have a smartphone and don't want to buy over the mobile phone, but still, that's a whopping percentage. 86% of people, have bought something online.
I think Nick's point, it didn't show up in your survey, though. The retailers didn't cite connectivity as a problem.
No.
Yeah, no, I wouldn't have thought so. So, look, Nick has a point, which I think a couple of years ago, I think it would have been tougher to answer that, because you would have said, well, okay, we can see the way forward for the 85% of the population that have got smartphones, but there is a rump who don't or can't use them, or have some disability, or whatever, and that would have been, and that was a hard question to answer a couple of years ago. But if you see how quickly Alexa and Siri and things like that are penetrating, I'm not sure it's as much of a barrier as it used to be.
I think that's fair in the European market and in the North American market.
Yeah.
But there are other places in the world where feature phones remain the de facto standard, and there's one so absolutely in North America, iPhones are the standard. 85% of American teenagers have got an iPhone. I think it's certainly in the 80%, but that isn't true all over the world. So I think we just have to be a bit careful about making assumptions about the capability and how long it will take for the long tail of developing economies to have that access to that kind of smartphone, high-end smartphone technology. In our market, if we're talking about the European markets, completely
then
agree.
the fact that we can have a solution that hits 85% of the people, that's good enough for the time being. I think we can move on from there. So I guess I'm more optimistic about the pace of those other technologies to take up some of that slack.
Yeah, and in actual fact, the UK is behind when it comes to social commerce.
Everything.
Yeah, well, I'll just talk about social commerce. So only 24% of British businesses are selling via social platforms, and the global average is 35%. So we're quite a way
Facebook
behind.
And stuff.
Yeah.
Yeah. That's just because we're naturally conservative people, Christine, or is there some other, we're scared of Facebook or something?
No, I don't know. That didn't come through in the research.
So that was specific to social commerce, was it, Christine? Sorry,
social commerce, yeah.
You've got to imagine there's going to be a lot of growth there, though. Once Facebook starts chucking Facebook Pay into Messenger and Facebook and stuff like that, a lot of people are going to give up selling stuff on the web and just sell it on Facebook and Instagram instead.
There's huge developments there. I mean, 96% of the population have been on social media in the past month, and people are spending
96%?
Yep.
Wow. I'm really surprised about that.
That sounds super high to me as well.
Yeah,
that's basically everyone except Nick's dad.
Yeah.
Yeah.
I mean,
actually,
I don't know what everything that's included in. Sometimes we, in our mind, think social media just equals Facebook, where obviously it's the whole gamut of social. But that's data coming from Data Reportal.
I wonder if that includes things like Zoom and.
That's what I mean. As I say, it could include things that we might not instantly think of as social.
Okay, I wasn't prepared to believe. So if you put those kind of things together, so you say, okay, well, the mobile address is kind of 85%, and then you have merchants who begin to move over to those platforms because payments are easy and they can't be bothered to run websites anymore and all this sort of thing. When you stir all that in with that kind of IoT stuff, and then actually it doesn't look so futuristic, really, does it? It's more kind of, it should be in the sort of strategic planning horizons already. And in reality, you're talking about something that in the kind of 3 to 5 year horizon, if those figures continue, will be dominant. If it's 35% buying through those platforms, 24% buying through those platforms now, compared to 35% in other places, that would sort of indicate that in the 3 to 5 year horizon, that those will be the dominant platforms.
Well, that seems like a very good place to conclude. We're on the hour. Yes, sorry, Dave. I know that.
Oh, sorry, you should have told me to shut up.
No, it's fine.
But you wouldn't have taken any notice anyway.
No, that's true, I suppose.
This is also true. So look, it's been a great session. I want to thank Jared and Nick and Christine and Dave for joining us today. We've had quite a few questions from the audience, which is good to see the participation and that people are genuinely listening in. So thank you to everyone that's listened in. For those of us in Europe, we're about ready to close the doors for the week. So have a great weekend. And thanks again to the speakers and the MPE team for organising this.
It's really thought-provoking, guys. Thanks very much.
Thank you. Bye, everyone. Have a great weekend.
Thank you, everybody.
You too. Bye.